Welcome to another episode of OETV Pro Insights. We welcome back Gary Brode from Deep Knowledge Investing. How are you, Gary?
Good, Scott. Thanks for having me. Great to see you again.
Gary, you're attending the Fordham Family Office Summit on Friday with some great attendees. My background has always been with institutions, so I'm always fascinated at the family office model space. This is not the easiest of questions, Gary, but what do you think the main conversation will be around the coffee stations?
So I think with the family office group, the big picture, they're going to be focused on the same things that you and I are, that all investors are right now, right? So it's going to be inflation, interest rates, the direction of the market. People always want to figure out, have we hit the bottom? Is the bottom going to drop out? Are we going to rally? When's the Fed going to pivot? All those normal questions. The one thing I would add that is probably different about this conversation is I talk to a lot of family office people. I have 4 of them on the Deep Knowledge Investing Board of Advisors, including some very prominent families. And when I talk to them, over the last few years, they've been doing a lot of investing in private real estate. So mortgage rates, financing rates, what's happening in the commercial real estate market, those are really significant issues for this particular group of people. And I think they're going to be more focused on mortgage rates and real estate than maybe the average investor is.
Very interesting. But also, people have been very excited about the rally we've seen a little bit this week, a little sell-off here and there, but a big rally on Monday and Tuesday. Is this more of a relief rally?
I think what it is more a matter of we got the first few days of earnings and they haven't been horrible. And the reason I think this is particularly interesting is I think people aren't realizing that they're in a bit of a trap. The Fed is in a trap. And here's why. We still have headline inflation running over 8%. Deep Knowledge Investing has said that is hugely undercounted. We think the real rate of inflation, as experienced by most Americans, is really in the mid-teens. So what you have is this huge amount of inflation. The Fed needs to keep raising rates. As long as companies are reporting good earnings and the unemployment numbers are low, guess what we're going to get? More rate hikes. And I don't think the market is necessarily prepared for that. But what we also think will happen is the thing that's going to help stop the Fed from continuing to raise rates is going to be a huge decline in corporate earnings. And so our guess is that the earnings estimates for the fourth quarter and for early next year haven't come down enough. And what we're going to get is one of two things, either more rate hikes or huge decreases in earnings estimates. I think the beginning of this week, people were relieved about pretty good earnings, but the other side of that means more rate hikes.
Now, Gary, I love your 5 things email that you send out at the start of the week. And I've noticed that you've been putting on social media every day this week. But I will tell the viewers, it is a must read when this email hits your inbox. The second point this week was we're getting asked why the Fed's actions aren't working. For those that haven't read that email, why aren't those actions working?
So Scott, thanks for the great comments. And for anyone who wants to get that piece, if you go to deepknowledgeinvesting.com, click the subscribe button. There's actually a free option and you can get the 5 things to know on Monday morning. But this question came from a member of my board of advisors, Howard Friedland. He also edits Deep Knowledge Investing. And I thought Howard's question was really smart, right? If everybody's complaining, the Fed has raised rates at this historical pace, why is inflation not coming down? And I thought this was a great question. And my answer touches on what we were just talking about a minute ago. So if you look again at headline inflation, 8+%, short-term rates are 3%. That means the real rate is -5%. If you look at our numbers where we think inflation is in the mid-teens, subtract 3 from that, you have real rates of negative double-digit levels. On top of that, people talk about quantitative tightening. The Fed has shrunk the balance sheet a little bit. So now it's just a little bit under 9 trillion. I think it's something like 8.8 trillion, give or take a little bit as of right now. And so our response on this is people keep talking about the Fed being hawkish, and we disagree. We think they're still in a stimulative environment, just less so than before. Basically, what's happened is somebody said somebody's overdosing of heroin, and their response is, okay, just give them a little less heroin.
Interesting way to describe it. It's been a very big week for earnings. One of the busiest actually of this earnings period. What have you thought about these earnings, Gary?
So the early earnings reports have come in better than people expected. There haven't been lots of disasters. I know people were very excited about the Netflix numbers. The banks in particular didn't have a bad quarter. I'm not sure all of it matters that much, and here's why. I have 30 years of experience as a stock picker, and what I really love is digging into individual companies. And for most of my career, individual earnings and cash flow and fundamental performance has been the thing that matters. This year, there have been two trades that have worked. Be short the market, be long energy. It is by far the most macro market I've ever seen. And I don't know that, certainly all year, company earnings haven't mattered in terms of the direction of the stock prices. I don't know that that's going to change in the next quarter or two. So the earnings have been fine, but the market is really trading off of inflation, interest rates, and hopes and prayers by a lot of people that the Fed will pivot.
Gary, thanks for your time with us today. And we're looking forward to hearing about your time at the Fordham Family Office Summit this Friday.
Yeah, looking forward to talking with you and Mehdi there tomorrow. Thank you.
And for everyone else watching, until next time, good luck investing.